Looking at the SPYs this morning, we're gapping up. If we look at Thursday, Friday, and we kind of drag across this resistance from the end of the day on Thursday and the midday on Friday, you can see we're gapping just above there. Zoom out a little bit here. So this is, there's been some selling pressure for about a week. We came off about 1.5% from the high, I guess, on the SPYs. So despite a lot of selling in technology, names, some of the leaders, the market had a very shallow pull. The market is very strong. Nothing's really changed there. What we want to see is if we can hold, even if we fail right in the open and come into like 288, hold higher and then get a close. I would say anything above where we sold off from Thursday morning, close above there, people would be ready to push us right back to the high. That would be the least path of resistance. So, close above here, pretty bullish. Would expect to move to the high. Close below 288 would be kind of interesting. We continue to fail in this area here. And even if we do fail, don't close here, I don't see much more downside. The low on Friday looks like around 286.80. Maybe we could come into this. Another dollar. That would be I think about $6 from the high, 2%. I think the last pullback we had was 2% before this one. This one, I think this was 2%. So buyers very much in control. We're getting small pullbacks from time to time. On IWM side, we are definitely well above 170. That's what we've been talking about since last week. Let's zoom in on this a little. So we opened below there, like a rocket ship. I guess we went straight up to 170, 130, and then held 170 in the afternoon. So if you wanted to be a buyer at 170, you had two opportunities, one on the open and then a retest in the afternoon. We're gapping right to the failure area here from Friday morning. And by the way, the market doesn't really seem to care about I think on Friday, was it over the weekend? Maybe it was Friday that we announced we're going to do some more tariffs on China, a lot. Actually, Apple said could impact their pricing. Apple got hit on that, but the market overall doesn't seem to give a shit. So that's the same pattern I talked to you about a month ago, which is when something new comes along, Trump started to talk about companies right before he was elected or after he was elected, and then they would get hit, and everyone would buy them, and they'd be up much higher. It was the same thing early on as the trade war stuff was being talked about maybe 6 weeks ago. I did a video on this. There was just, we'd sell off a couple of dollars, up a couple of dollars, and now it's just the market might move 50 cents. The SPYs might move 50 cents, if that. So it's each new thing that gets presented, the market has some volatility initially, then adjusts and goes back to the fact that the market is just in pure bull market mode. On the IWM side, we want to pay attention to where we failed Friday morning, right here. That had been resistance going back to late August, and then acted as support for a while here, and then here again. Intraday went through, closed above, and now it failed there on Friday. So it is kind of an interesting area. We're gapping right to it, 171 and a quarter, 170, 130. So it would catch my attention if we spiked here on the open and then we were back below it. People might sell us right back down to 170. Any type of consolidation above 170, 130, look for a move to Thursday's high, 172 to 172.40. This little band right here. Okay, so this is going to be a really quiet week in terms of news flow. The saying has been for many years, as we get to fall, we've passed through earnings season, now we're waiting for October for the next earnings season. And then you have early September, the Jewish holidays, where things are slow in New York, because a lot of Jewish people involved in the markets in New York. And so there's just very little news flow. So maybe you'll see some biotech stuff, but really not much in the way of earnings. Maybe you'll see a merger announcement here or there that might impact a few names. So this morning, we had Baba. That was announced on Friday that Jack Ma was leaving. Turns out that he's not even the CEO anymore. He's the chairman. So Similar to what Bill Gates, before he left Microsoft many years ago to do his philanthropy. Plus, it turns out that Ma isn't leaving for another year. His birthday, I think, is today or this week or something. And he's going to leave when he turns whatever it is, 56 next year, and focus on education, which he used to be a teacher before he started Alibaba. So that's going to be similar to like Bill Gates leaving Microsoft at a young age and focusing on philanthropy. That's Ma's plans. The guy who's CEO, I guess, is going to just continue to run it. I was actually a little bit surprised when they did that clarification that it was still down. It is a couple of dollars off the low. And it did actually technically break longer term support on Thursday, so that's probably continuing to weigh on it a little bit. It's actually probably the main reason why it's not bouncing that strong right now. So I just wanted to show you the longer term. So we had this big uptrend, tested a few times, finally broke on Thursday. You got to go back to early 2017 to kind of get to these. Actually, summer 2017 was 160. Early 2017 was 140 area. Ideally, what did I put on the sheet? Yeah, so ideally you'd want to see a retest of this low from Friday's after hours. You might get a higher low, like a 159, and then it gets back above 160. I would be focused on trading it for a bounce at that point. What would the bounce look like? 162.5 and then 164. And you kind of see, like, there's a lot of potential resistance here. This is where it bounced from the mid 160s a bunch of times in the last 6 months. So the breakthrough here, it could take a few more days of consolidation in the high 150s to the low 160s before it really made a valid attempt to break back to the upside. And that may not happen. It may actually just fail up here in the low 160s and go all the way down to 150, at which point I would say being long from 150 on a longer time horizon is an amazing entry. Even here is probably fine, but more of a dream entry would be closer to 150. ECYT. So this one is getting close to doing a phase 3 trial for some drug. The FDA agreed with how to design it, which the market views positively. Now, it's already in a pretty big uptrend. If you go back to March, it's more than doubled, and it's been in this channel. And it's gotten to the top of the channel a bunch of times and continues to fail and come to the bottom of the channel. So that's the first thing that catches my attention technically. The second thing that catches my attention is that it did try to break out a couple of times here above 20 and failed in the last week. Sold off pretty hard coming into this news. So anybody who wanted to get out probably got out the last 3 days. It sold from 20 down to 17. So as long as it's above 19, I would say I'd be looking on the long side. And then I'd want to see, does it test this double top? If it tests it and comes back and holds 20, you're good for upside. If it tests it and comes down and actually, let's say, gets below 1980, it's a triple top and you don't want to be long it. You could try to short it. So that's that. And then we have Tesla, which we called out Friday morning into the low 250s. I think 250, 250 to 253 was kind of my buy area. I remember the firm was net short at that point, so it was a little tricky trading on the long side on stock. Really had to do options. It did bounce about $7 from there. And then actually more than that, it bounced $13. I guess the initial bounce was to 260, then it held 260. The second bounce, it got to 268 and failed, which is important. 268 may come into play today. So 268 to 270 support. That's where it failed off of the morning bounce. It came all the way back down to 260. I guess the market got hit pretty hard. That was the higher low. And now you've kind of got your uptrend. If we go back to where it gapped from on Thursday, let's say 277, 278. It's erased about half of this. If you go from 280 down to 252, this is about the midpoint now. I could see it bouncing a little bit more here. Maybe, what do I have on the sheet? 276. Yeah, so I think 276 I'd start to become skeptical of the move. That would be a pretty big bounce off of the 252 low. Some sort of failure in this area here. Best case scenario, for some reason people chase it, I think is 280, the gap fill. But I could definitely see it failing right around here. And then you'd say, does it come into 270, 280, 268? So it's going to be a risky stock. The easier play was Friday being short below 270 and looking for a bounce in the 250s. It's going to be a tighter range today, but I think what I've outlined right here is a good starting point for levels. Okay, at TA. So this is one that had run up a lot, big gap. I thought it had a potential failure. If it held below 68 here, maybe it could come into 64. Let's zoom in and take a look at it. So it did come in right on the open, actually, a few dollars. 66 was the low. And they zipped it right up to 70, double failed here twice on the 5-minute. It did hold above 68. And then you got your uptrend when it's, this is the conservative trade if you want to trade it long is, yeah, you can buy it into this pullback into this. I think we highlighted this as potential support based on the after hours prices. But the real conservative trade is after you see the big green bar comes in, holds here, 68.5, and then takes out 70. Then you can kind of play it for a move to see what happens here at the after hours high. And it got to the after hours high and consolidated above it. So this is textbook in terms of holding a large gap. Then it went up another $4 and actually sold off to the after hours high, and so it held that the rest of the afternoon. So that's kind of, that's the long play. So it gets above, it holds the after hours high, goes up $4, comes in, holds it again. It never rips back up to kind of the resistance area. These are the spots. Let's see where it is this morning. So this is kind of the range I'd be working with to start the morning. It broke down from, looks like 73.40. So 73.40, 74 resistance, and then Friday's high. And then 71.5. That's even a little bit below that support. And then 70. And just trading this range. Over the next few days after big gaps, typically you have a consolidation before the next move. Any type of move and hold below 70 would be pretty bearish for it. And any type of consolidation in the morning above 74, I'm going to break to the upside would be very bullish. If anyone gave it new price targets, let's see here. I don't see any new price targets today on it. On Friday, they gave a couple of people gave 75 targets, which it hit intraday, right? So could just trading about a $4 to $6 range for the next few days before the next move. Check in with Facebook. It was the 160 double bottom, had a big move up to 64.5. Actually sold off pretty hard. So we have this area here, 64.5, Friday's high. Twitter sold off pretty hard from 31.5. Kind of got to the prior day's second down leg area. Never tested the top of it. High or low, but it's still below 31. It's hard to get that constructive on it. Certainly buying it on the flush through 30 is fine, but until it starts to get some closes above $31, I would be concerned that it would roll over again. And Twitter has a tendency to do that. Facebook, all right. We should take a look at Apple. So Apple, I just think when it got to the high 220s, looking for a pullback to 220, 221 was a reasonable thing to do. It was extremely extended, short term. But I definitely think, this prior high here, it's 219 here or something. I would definitely be looking to be long this here. So you can see it bounce, let's see, what is it? $3 from the after hours low to this morning's high. And if it has a nice bounce today, like 223 to 224s would be the spot where I'd expect it to kind of fail for now. Here's the downtrend from the last few days. A few lower highs. If it closed above 224, that might be it. As always, can you take a look at KFY? You put the dollar sign tag on there too. Wow. I'm just looking at the news that caused the drop Friday. I mean, that's positive comments from the CEO. It's a lot. It dropped a lot. Let's look at the daily. Normally trades about 600,000 shares a day. It erased this entire move from 2 quarters ago, it looks like. And actually, I guess this was 2 quarters ago. So you can see here was earnings. I guess this was earnings here. These are the last two. Whoever was driving at those 2 quarters, it's stopped right at a 48. Again, I mean, I would look for a bounce. Like, although, geez, it's such a nasty down move. $48 and $50 are the 2 key levels down here. You can kind of see when it reported 2 quarters ago, it pulled back and held 48, and then it held 50. It did 4.5 million shares on Friday, so maybe it'll do a couple million today. But normally it's a next dinner stock. Could easily do 2 to 2.5. As always, be patient and good luck.